Hey everyone, welcome to another weekly stock analysis where again we take a fundamental look at different companies, see whether it's a buy, sell, or maybe it's a hold at the current time, depending on those fundamentals. Let's talk about the company, that's always important. But the big thing that we do that's different, we dive into the numbers for you so you can actually learn how to invest with a value type style. Again, if you find this video informative, interesting, want to learn more, be sure to hit that subscribe button below. Now today, most of the time we kind of pull ones out that are popular. I think we're giving people maybe too much information here. Last week we picked one that we liked, and this week we're giving another one that's of good interest. I'm talking about Southwest Airlines here today.
Yeah, I think we can. So we can get this much information on the ones we really like, but no, seriously, we do try to find ones that people like. And the thing is, this is reality. If you came on here every week and you had to buy every week, you got to question it. We try to show you the true companies, and you do find a buy once in a while. In our own portfolio, we say if we do 4 or 5 buys a year, that's probably pretty much the average. So the same thing here. We do want to point out to you if we find something good to buy, but we also want to cover companies that maybe you hold in a portfolio that you should maybe get rid of. And that's why we do both sides, and also just make you a more educated investor.
Yeah, just pull out different things to look at. And Southwest in particular, people are worried about recession. Maybe, oh my gosh, the rising interest rates going to create problems. And people aren't going to travel. And oh my gosh, the high gas prices. It's going to be a huge hit to these airlines. And right now, I mean, it's a small concern, but I always tell people, if you looked at a company and said you had no concerns with it, you're never going to invest. There's always going to be some question marks with any business.
And the other thing too, Chase, we talk about the high price of energy going up and airlines and so forth. The thing you got to remember is that people still have not done a lot of traveling yet from COVID. So I believe they're willing to pay these higher prices to get out and travel and see things again and so forth. They may not like the higher fares, but I believe they'll pay them because they've been cooped up for what, over 2 years now.
Yeah, and we know during 2020, I mean, the savings rate was, gosh, extremely elevated. Again, we know that there's more than, what do we say, gosh, $20 trillion in M1, M2 here. There's a lot of money. And again, M2 is a collection of checking accounts, savings accounts, money markets. It gives you an idea of how much cash is readily available to people to spend, essentially. But what that tells me is that, you had all those savings. And you're right. People are cooped up. It's like, gosh, well, I can afford it. So, I'll do it. I can still spend at these higher levels because I had all these savings that occurred during COVID.
It's just another thought as well. We talk about all the money in M2 and so forth, or that $21 trillion. There's another thing that's not been tapped yet when things kind of get a little bit difficult. All that equity that people now have built up in their homes, they've not touched that yet. So that's going to give you, I'm going to guess here, 3, 4, maybe $5 trillion more of equity, and they won't use it all. But what if they use just 500 billion or $1 trillion more coming into the economy to take that trip? People will borrow to go on a trip, for a nice trip to maybe Europe or someplace else, and take that plane from Southwest. Or I just gave away the company we're talking about. But
I already gave that away, so you're good.
Okay, good. All right. But again, these are things you got to think about. Is that you'll hear all the negative news like, oh, this is bad, inflation, this, the war. You got to look at what the consumer is going to do and how much money they do have. And I will say, I know there's people out there that are struggling with the food costs and so forth. But as an investor, you have to look at other people that be using your services, like flying.
Yeah, and I want to be very clear here. We're not going to say anything like we saw with COVID, where they're going to shut down the world essentially. And Southwest, I don't see them going through another period like that. The recession we're talking about, I don't see it being like 2008, 2009. There's always this thing, I keep talking about it, what I'm going to call a healthy recession, where, it's just kind of a natural part of the economy where it's just a small contraction in GDP for a couple months, couple quarters, whatever it may be. It doesn't mean it's a collapse of the economy. And during a situation where a healthy recession, Southwest can do just fine, especially if we still have business travel coming back, consumers still traveling a little bit more. You could also, I'm just thinking out loud here, see a goods contraction, and then services kind of maintain themselves, and that could lead to, again, a recession.
Yep. And again, we do need to have money come out of the economy, because if not, you'll have inflation just run wild. So this is a normal thing that happens. It's not going to be fixed in a week or two, but you have to, again, look at how is this going to affect the economy? Can I invest in a business I'm not overpaying for? Very important. That also can do very well during this time because of consumer demand and what's going on. And I did I shared this on my TV segment last week on KUSI that actually the futures for oil in December is $88 a barrel. So we may see a big increase, and then perhaps it'll taper off. I don't think the Ukraine war is going to last till December. So we will see. So be prepared for different things.
Yeah, short-term headwind for the flying companies, the airlines, the airlines is that fuel cost. But as you said, it comes back down. It's a temporary headwind. A lot of them also have fuel hedges that can help with the volatility in the oil prices.
I'm glad you bring that up because we're not going to look at that today. But if you're going to invest in these companies, you should look at how and if they are hedging fuel costs.
Yep. So with that said, some considerations, but as always, you said we want to make sure we're not overpaying for that company. So let's look at the numbers here for Southwest.
All righty. The symbol is LUV. I've always loved that symbol there. They're the industry of airlines. Not much float on the stock, 3.4%, 78% institutional owned. We do see a PE ratio of 27.5. Now that sounds high. Look at the industry, not material. So here, Southwest got a pretty decent start in a difficult industry. We do see price of sales are expensive, 1.7 versus 0.8. Price to tangible book value, very good, 2.9, almost 1/10 the industry at 24.4. So I like seeing that. And I also like what they're paying for the cash flow of this company, 11.6 versus 19.2. I do have to say I'm disappointed. No PEG ratio there, which is your price earnings divided by growth. So we can't see how much we're paying for the future growth of this company. We do see the earnings for 1 year, nothing there. We do see for the 5-year period, they're down 14.1%. I got to say, no surprise on those numbers based on what we've seen. But we do see a nice turnaround in sales. Sales for the 1 year up 74.5%. Look at that number compared to the industry, 39%, almost twice as good there. We do see the 5-year growth rate on the sales, a negative 4.9. That's better than the industry that fell 9.8%. And then the 5-year earnings per share growth estimate from the analyst, well, I'm disappointed here. A negative 21% versus a negative 11.7. So disappointing number there. They do not pay a dividend. Looking at the balance sheet, and Southwest has always been known for a good balance sheet in a very difficult industry because these are capital intensive businesses. And to be able to buy planes and still have a clean balance sheet, that's very important. And now we'll see how they did through COVID. A nice current ratio here, 2.0 versus 1.2. So a lot of liquidity there. I like seeing that. Debt to equity, 1.2. There's the high debt industry, 63.3. So again, doing a good time. I think their debt was lower before, but still 1.2 debt to equity, not a bad number. Also, too, I like that we see low intangibles, 3.5% versus 6.5. Net profit margin, 6.2. That's a nice profit margin. We can see the industry is down a negative 14.8. Return on equity, 9.4 versus a negative 20.7. That's good. And then also return on capital, 5.9 versus negative 5.8. So I'm liking seeing these numbers. It tells me that, yes, this is a company that I like to take the time to do more research on it and see if it's a good buy. And you're going to tell us about what it is going forward.
Yeah, so current price here for Southwest Airlines, again, that ticker symbol LUV, current price $44.38. You see the 52-week high here, $64.75 achieved last year, pretty close to this time now. It was April 14th of 2021. See that 52-week low, $36.75. That was hit just this past month, actually. And you see that year-to-date return up about 3.6%, which is beating the S&P 500, which is down 4.4%. So it's done okay, pretty good actually, if you take into consideration the rest of the market for 2022. I do see over the last 1 year, though, the stock price is down 23.1%. I think a lot of this stems from people overbuying the stock coming out of COVID. Oh, it's so exciting, the reopening play. And I think the traders got ahead of the investors. That's why we've seen a pullback, and it could create that opportunity we're looking for in Southwest Airlines. Now, if we go out to December 2023, you do see estimated earnings per share of $3.33. Would give us a target sell price here of $55.28. It's about 25% away from the current price. So at this time, it would actually be a hold for us as the forward PE is over 13.3 times earnings. we like that 30% margin of safety. So I don't know if I would buy it. Actually, I can tell you I wouldn't buy it at these levels, but it wouldn't take too much to either have those earnings tick up a little bit or have the stock price pull back a little bit.
Exactly, Chase. Because again, I think it's definitely worth watching this company. And again, you could see the stock price fall down to probably a good buy price. I'm going to say is maybe somewhere around 39 or 40, give you that 30% margin of safety. Or we could see in another month or two, maybe those earnings rise because maybe oil does get a little bit better. Maybe they do see that there's more people coming in paying the high prices. So I like this company. It's a good, solid business. You're not going to make 100% in 1 year on it. But gosh, I think over the next 4 or 5 years, it's a good company to have in your portfolio if you pay the right price for it. And again, always remember, watch the business, because if you don't watch the business, maybe the CEO, and that's one thing that does scare me about this. What's his name? Gary Kelly, the CEO?
Yeah.
Been there for a long time. What if he leaves? Got to watch for that.
Yeah. Hopefully he's got a good person he's been grooming to take over there.
Yep.
Yeah. And the other thing I will say about the airlines, the travel companies, is I'm very curious what Southwest did during COVID. And what I mean by that is some travel companies, they issued a ton of stock. So let's just make numbers easy. Let's say pre-COVID, the company was doing $3 billion in income, net income. Well, now if they issued more shares, and let's say they had to double their share count, well, now if they return to $3 billion in net income, you're sharing that. It's really half in terms of the earnings per share because they had to double the share count. I think Southwest was actually one of the ones, because they had such a clean balance sheet ahead of time, that I don't think they had to issue a whole lot of stock. I think they were able to issue some debt. I don't know what the interest rates were on that, but I think they came out of the whole difficult situation, again, a very difficult situation, people not flying at all, to come out the way they did. It's pretty impressive. And they were paying a dividend also. They had to cut that dividend. I wouldn't be surprised, because Southwest, in my opinion, is just such a well-run company. You could see that dividend return maybe in a couple of years. It's going to take some time, though, to heal from 2020.
Chase, always tell people, do the research, look at different things. You kind of shared with people, with the viewers, the investors, of some things to look at. Did they issue stock? Did they issue debt? I don't know if they did or not, but again, these are things when we tell you do more research. These are the tips we're trying to give you to do more research. Great tips there.
Yep. Well, thanks for joining as always. Just a reminder, this video is for informational purpose only, should not be used as investment advice. If though you did find it informative, useful, learn some things along the way, be sure to hit that subscribe button below so you're informed about our future videos. You can also visit our website, smartinvesting2000.com, for more information, our past videos, our podcasts, things of that nature. But thanks for joining us, and we'll see you here next week.
Sounds good.